Okay, guys, good evening. It is 9:52 p.m. New York time, Wednesday, March 15th, 2017. Hope everybody's doing well. And just a quick video here regarding the post FOMC statement and rate decision today. Probably certainly the main news event of the week in the Forex world. And just want to make a quick video on a couple of trades that I took, and just explain why. So as you guys know, I trade mainly Elliott Wave patterns, but I don't trade them in a vacuum. As I've said many times, I don't trade the news, but I don't trade technicals in a vacuum. I use them together. So in other words, I look at the charts, I look at the patterns, and then I use news events such as this to time my entries and exits. And so I don't get involved with reading what the analysts are saying. You know, before a news event, you can go on like Forex Live or any Forex news site and kind of read, you know, the quote analyst expectations. Because if you get caught up in that, a lot of times they're not going to be right, quite frankly. And so I'm well aware of the news event, and I certainly will take that into account. And in fact, that's what I'm counting on, for that news event to create the volatility. But I'm not trading it with any bias going into it other than what the pattern shows. So I've learned, you know, over time that I don't get bogged down reading the analyst expectations. And I know the events on the Forex calendar. I know what's coming out. I know when it's coming out, and then I go and look at the charts. And if I can see a pattern potentially, then I'll get into a trade. If I don't see anything, then I'll just let it go. For instance, we had Australian news a couple of hours ago. I did not take a trade on that because I didn't see a good trade. Even though I could see the patterns, I passed on it. So anyways, so in reference to this news, so again, this was earlier today. Where are we here? Yeah, right here. 2 o'clock New York time, FOMC projection, statement, funds rate. Now, I'm not going to go back and read it. The statement was quite lengthy. There was a lot of stuff in there. There was a press conference after. You can go back to the U.S. Federal Reserve website and watch the video if you want, or it's probably posted on Forex news sites. You can go to Forex Live. That's probably the best site, or Financial Juice, and find all the summary of the statement. So, but basically, you know, the headline, of course, was very hawkish, because they did, you know, they raised rates, and so that was expected. The Fed has been talking up that possibility, and all of the Fed members except for one voted for the rate hike. So that was very widely expected. So you can say, well, you know, it was priced in, and everybody was expecting it. So it was, you know, the old buy the rumor, sell the fact type thing, or however you want to say it. But if you also read the statement, which I did briefly this afternoon, and I didn't get to make a video before the news came out because I've been in a class today. So this is actually the first time I've actually had to do anything, to sit. I took the trades on my phone just before the news came out. So anyways, but if you read the statement or read the summary, but I would suggest reading the full statement, because sometimes the summaries don't pick up everything. You'll see that although, you know, they feel that the economy is doing okay, and jobs are growing, etc., they still have some concerns, and they're still saying they're a bit accommodative in their monetary policy, and that's a little bit of a dovish statement, and that they still have concerns about where inflation is going to go, because of course they want inflation to go up a little bit, and it's been edging up, but still don't think to the point where they're too excited about it, and they're still referencing, you know, reinvesting, which is more, you know, basically Fed interference in the market, but you know, that's a political discussion. But anyway, so like I said, that the headline was, wow, they cut rates, so you would expect that, you know, the dollar would have just blown through the roof. But in fact, it didn't. In fact, it went completely the opposite way. and based on the patterns, that did not surprise me, and so I took a short on the U.S. Swiss and a long on the euro dollar, and I'm still in those. I'm going to keep an eye on them. I expect they probably will go for a while, but I've already locked in quite a bit on both of them, so I will see what happens during the London session tomorrow, if it continues or if it takes a break. But I think over the long term, though, we've got a ways to go. So anyways, a quick look at the charts. So this is the US Swiss daily, and this is a very busy with all the labels I've got on here, but maybe I just clean them off here and start over again, so just so you can kind of see it. I don't know why my template didn't clear here. I don't know. I don't know why it didn't go away. There we go. It's a little bit slow here, and I don't need this one-click trading. This is a demo account. I don't trade on here anyways. So here we are on the daily chart, and I guess you could probably go to the 12-hour too. But basically what I'm looking at here, you can even go out to the weekly chart, and you can see, if you want to talk about old candlestick patterns, you can see this, basically this double top up here on the weekly, and down to the 12-hour to the daily. I probably, again, honestly guys, I don't count waves per se. I kind of just look at the patterns and the shapes. So, but if you wanted to count this, I suppose you could say something like this is a 1, 2, 3, 4, 5, something like this on this initial wave on the daily, and that this is a corrective move up, something like this, ABC up, and now of course we broke this ABC on this trend line here. In fact, we had broken it several days ago, but it came back up and retested it, and this is what I was kind of waiting for, because this, really you could, if you wanted to be really aggressive, you could have gone short up here. I'd have to go back and look to see if there was news here this day, but I always say as long as it's respecting this trend line, then the correction is going to continue. This is definitely a correction, but because it's overlapping waves, it's sloppy and choppy, there's really no real motive to it. But so like I said, aggressively you could go short anywhere up here at one of these highs and just hold it, and then if it bounces back up, you're just going to have to be able to withstand the drawdown. But I didn't. I've been watching it, knowing FOMC was coming, and that this this is going to break down. So so that's kind of how I see it from a labeling standpoint. Now, from an overall standpoint, you could look at this this whole move here. You could look at this, maybe this whole thing is this an ABC of it? And let me change the color here so you don't get it confused with the other correction I just labeled. Just pick a different color here. So is this whole thing in A, B, and now we're going down for C? Or is it a start of a new downtrend? So this is a 1, this is a 2, this is a 3, just starting 3. So we'll have a 4 and a 5 eventually. And again, I'm going to change the color on this so as to not confuse it with the first label I put. So just ignore this 4 and 5, because if this is a 1, 2, 3, then the 3 is just starting, so the 4 and 5 will be happening later. So is this whole thing in A, B, C, or is this a 1, 2, 3, 4, 5, and we'll keep going down? Well, even if it's in, again, as I said in past videos, you really don't need to know that, because the fact of the matter is this is a daily chart, and so if this is an ABC, this is 465 pips. I would expect that this move down as the C would go at least that far, which would take us all the way down to around the 97 area down here, which means this has got a long way to go. Okay, so, but I don't need to know that, because either way, if you're going to be in this short and you're going to be committed to it, you're going to be committed at least down to here. Now, if this is a 1, 2, 3, 4, 5, this is going much further. This will, probably go down into these areas down here. So I don't need to know that right now. And it just depends, how much you want to ride this. Do you want to just stick with it, through what inevitably will be retracements and corrections, or do you want to go down to a lower time frame and just pick up a couple hundred pips and be out, whatever. So that's for the trader to decide. But anyways, so this is the US Swiss, and the euro dollar looks pretty much the same, just flipped over, obviously to the upside. So that's kind of how I see these pairs right now. And so before the news came out, go down to the hourly chart here. This was the candle, this green candle, right before the news came out. So I was watching this, and going into the news, I still was kind of waffling back and forth, because again, I was falling into the trap that they're expecting to hike rates and the dollar was going to rally. So I was watching it, and I was literally about 15 minutes before the news came out, I finally jumped in, because on this candle right here, you can see it was going up. And so generally what happens is, you have your big banks, your very large institutional traders, they're gonna drive the price up just before the move, because what they're doing is they're tapping in, they're trying to trigger off buy stops for people that have buy stops placed, or people that are already long the market in here, figuring, okay, they're going to raise rates. That's the general consensus, and this thing's going to shoot through the roof. So they're buying up the market. People are just jumping in long anyways before the news comes out, triggering off buy stops, whatever. And so when I saw this rallying just before the news came out, the risk is that this could just be an early reaction and it's going to keep going. But I find more often than not that whatever it's doing just moments before the news, it's going to do just the opposite once the news comes out. And it's just position squaring, it's liquidity tapping, it's people just assuming they know what's going to happen, and so they're jumping in. So as soon as I saw this pushing up, I went short. Actually, I think I had a sell stop over here. Because again, I was not able to be right in front of my computer, so I didn't have the advantage of looking at my full platform, just a little bit on my iPhone, and it's not ideal, but that's the best I had. So so if I was sitting here and had been watching it live, I probably would have just jumped in at this point. But I had a very small risk. I put my stop, I think, just above here, so even if it spiked a little bit, I was probably going to be all right. Actually, I think I had my stop up here initially. I wanted to give it a little breathing room, but I figured, listen, if it was going to just rally, it was going to hit hard and just go, and I would have been taken out, that's fine. Or if I had a stop in here, I never would have gotten filled, the market would have gone up, and that's fine. I would have just deleted my order. So I didn't have much risk in this anyways, but I was fairly confident going into the news with seeing this rally, and obviously this is just sideways choppy action ahead of the news. Something was going to happen. So, and indeed it went down. And you can see this trend line here that I had drawn on the daily chart. The price went back up, retested it. This is old, old candlestick charting of, previous support now becomes resistance. And that's what happened. It went up to this line, hit the resistance, came back down, chopped around, and like I said, you could have probably gone short way back up here if you were really aggressive, several days ago. But this is a good spot too. So that's how I see it, and so far it's working out pretty good. You can see the CCI here going down. Actually went off the chart, went down so aggressively, but it's going down compressed, you see this, and now it's coming back up, spread apart. This is certainly indicative of a correction, and you can see right now the market is kind of correcting. Of course, we're in the Asian session. I expect overnight it'll continue to move sideways. It might actually move back up a little bit, and then I would expect we get another push down during the London session, and that may complete an initial wave down on those, say on the 1 hour chart. That this could be 1, 2, 3, 4, 5, and then we'll have another correction. But I do think this has some more downside even on these lower time frames here. So euro dollar I didn't label, but we can go out and look at this here. Again, kind of the opposite. Like I said, you had this down move, and then you had this up move here. So it's this up move. You could label this just like I labeled the other one. You could label this as an ABC, ABC. And we're going to go up and finish the C. You also could look, this doesn't really look like a trend right here. I mean, it kind of does, 1, 2, 3, 4, 5, but It really doesn't look like that much like a trend because it's just, I don't know, it just has a weird shape to me. But again, I'm thinking that this is, you know, ABC, or is this a larger 1, 2, 3? So it's not as clear as the U.S. Swiss, but certainly I think this has some more upside potential. And again, even if this is just an ABC, you know, this is 490, 500 pips right here, and off of this low, that would take us up to somewhere around the 109.90 area on the euro dollar if this bears out. So again, you know, I've locked in some profit, and you know, I'll be happy even if I get taken out at this point. But again, on the 1 hour chart, you again have the opposite of what you saw on the US Swiss. This could probably be a 1, 2, 3, then we're going to have a 4 here, and then we'll go up again. And again, CCI going up, compressed, going down, spread apart. That's indicative of a strong move, you know, and I would expect the wave 5 to probably be at least the same height as the 1, which is about 40 pips. So if this is wave 3 and this corrects a little bit, that will go up again. Now this actually could just be wave 4 of 3. So, you know, instead of labeling this 1, 2, 3, 4, 5, this could be 1, 2, 1, 2, and then you've got 1, 2, 3, 4, 5 of 3, and then we'll have a larger wave 4, and then we'll have a larger wave 5 to the upside. But either way, you know, this is going to go up again. And again, I was looking at this as, you know, again, opposite of the euro dollar, I mean of the US Swiss, and again, just the opposite, where you had previous resistance now becoming support. It broke through this corrective trend line, came up, kind of retested it, poked through it, and then we took off. And again, this red candle was right before the news came out. So again, opposite of the US Swiss. I kind of saw it going down and selling off into the news, and then of course as soon as it came out, spiked down a little bit and then took off. So that was my cue when I saw this red candle aggressively forming as the news came out. And again, it's a risk because honestly, you know, you could have just seen this plummet to the downside, but the pattern didn't bear it out, and I was pretty confident, and I had a buy stop, you know, right about here. And you know, I said, whatever. If I'm wrong and it goes down, no harm. I won't get filled because it's just going to go straight down. But I thought I was right, and you know, I left a few pips on the table. But again, I wasn't in front of my computer, so I just wasn't able to get a good visual the way I'd like to, you know, on the platform. So again, this is my demo platform, as you can see here. So so anyways, guys, so that's it. We also had Kiwi news came out tonight, and that was negative for the Kiwi, so I'm actually long the Euro Kiwi right now and short the Kiwi Swiss. And we did have Aussie news come out a couple hours ago, and that was a mixed bag. And as I mentioned at the beginning, I did not take that trade because it was a mixed bag. Let's see if I have this labeled. So this is when the news came out at about a couple hours ago now. This is the, let's go to the 1 hour chart. So here's the this is the Aussie Swiss, and I have this labeled as 1, 2, 3, and I think this news triggered off a wave 4. I do think this may go down a little bit more, but I do think ultimately this will turn back up again, and that this whole thing is just a correction to the uptrend. Although, you know, on the 30-minute chart, I could see this as a 1, 2, 3, 4, 5. But sometimes you get these corrections that they're at these corrections actually look like trends, and moves down and then turns back up again. And I think that will bear out because, again, CCI, again, this is a secondary confirmation tool for me. I don't trade on CCI, but you have this compressed going up here, and now you can see it going down, spread apart. This is pretty indicative that this is going to go back up again. So I'm fairly confident this will go back up. We may edge down a little bit more down to here, but ultimately this will go back for another push to the upside. and you know, might be good for another 40 or 50 pips. And but like I said, it was a mixed bag, which is why I didn't trade it. The news came out mixed, and I wasn't, you know, it looked like going into the news that the news would probably end the wave 3, or at least part of the wave 3, and that's exactly what it did. That was, this candle again was the news, and we pushed down. Now it's kind of consolidating, and you know, it may drift lower overnight. We may get another little push down, but I think this will go back up and at least go back and retest this high. So that's why I didn't take it, although I may still take a long on this to the upside once I feel this correction is over. So that's it, guys. Again, don't trade based on anything I'm telling you. Obviously this is after the fact anyway, so it's certainly, you don't want to jump in now, it's too late on these trades, but I just want to make the video. There is another more major news event coming out later tonight. It's tentative, of course, because they never announce exactly when, but the Bank of Japan is releasing its policy rate and monetary policy statement and press conference. Now they got the press conference scheduled for 2:30 a.m. New York time. I don't know if that's set in stone. It might be, but certainly it's tentative, as it always says for these, because they never really know exactly when. It usually is somewhere between about 11 p.m. and 1 a.m. New York time that they actually release these numbers. So it's a little bit maddening if you're trying to time an entry, because you don't exactly know when it's going to come out. But it's somewhere within probably that 2-hour period, and again, it'll be based on the patterns. I haven't actually even looked at the yen pairs. I may take a look. I don't know if I'll trade it, because I'm not going to be awake when the press conference comes out anyways, but I'm going to look at it. But just so you know, if you're in any yen pairs as of right now, you may want to just be aware that this is coming out, and you know, it could be a non-event, but be very cautious, because this certainly can trigger a lot of volatility in the yen, you know, when this comes out. And early tomorrow morning, New York time, 4:30 a.m., you've got the Swiss franc LIBOR rate and their policy assessment. Now, other than what, about a year plus ago, when they took the underpinning out from the Swiss franc, and we saw that huge move across the franc pairs. Normally, this is a pretty subdued. They're not expected to make any change to their rate. So unless something really crazy gets announced from the Swiss bank, this probably won't do anything, even though it's red level. But again, if you're in any Swiss pairs, just be aware of this coming out early New York session, early London session. That you know, but again, unless there's something really bizarre that they announce, which isn't anticipated, then this probably will be a non-event. And then the other thing coming out around 8 o'clock New York time tomorrow, which is going to be important, is the Great British Pound, the bank rate, monetary policy summary, and the votes. And they're not expected to change anything. So again, as always, when they're not changing anything, the key will be in the monetary policy statement that comes out with the news, with the actual vote and rate. So sometimes this vote can change a little bit, but I mean, right now they're not anticipating a change, and the rate's not anticipated to change. So again, the money will be in the policy summary statement. So still some major event risk coming up for the rest of this week, including later this evening. So be aware if you're in any of these pairs or currencies. So, and but mostly this video is regarding the FOMC and all that. So anyways, guys, so that's it. Longer than I wanted to make, but have a great night, and I'll talk to you all soon.